Welcome back to Reform Millennials, a podcast where we discuss the intersection of markets, politics, and pop culture. Please remember that the content of this show is for educational and entertainment purposes only. Nothing should be considered financial or tax advice. Please consult a professional before you make any investment decisions.
Morning, Joel. How's it going?
Pretty good. Now, big week on the horizon, especially for you.
I know. I was saying budget days are always just I have such mixed feelings about budget day because it's so exciting, but then you always just think, okay, have I done enough to prepare? Have I thought of everything? So I feel like we're in pretty good shape for today. And as they say, it ends up being like this hurry up and wait situation because the budget today it's November 4th. The budget will come out at 4 p.m. Eastern, and then we'll be scurrying about for the rest of the week, pulling what it means together. So excited to have this pre-chat.
Yeah, I'm anticipating that it's going to be, how do I put this? Inflationary. Optimistic in any case, but I know and I wanted to ask you this quickly. Do you think culturally budgets have become more important, or have we just gotten older?
I think that budgets have become more important because the fact that the economy in Canada is not obviously doing the best that it's ever done. So I think that it's just a function of the fact that when things are not going as well, there was an Abacus data survey about the top issues for Canadians. I popped it in our Notion, but the top concerns for Canadians right now are cost of living and affordability. So I think Canadians pay more attention to budgets when they themselves are having personal struggles or concerns about their household budget. So I think that's probably why people are paying more attention. And of course, with everything that's going on with the trade war in the United States, I should stop calling it trade war. We're not in a war, we're in a trade discussion. But I think it's just top of mind for everybody.
Yeah, no, certainly. So I guess what I'd like to do is kind of start off with a little bit of market update, and then we can transition into kind of some expectations for 2 o'clock this afternoon. But I think the big story, and I know the big story dominating market conversation right now is the driver of the US economy. And what is that? Just last week, we had a Harvard economist come out, Jason Furman, who had a report on the GDP expansion of the United States. And it came in about 1.4%. 90% of the contribution to that 1.4% was driven by AI CapEx. And that is quite staggering. When you take into consideration that only 0.1% of GDP expansion was coming from the remainder of the market or the consumer, you start to call into question what exactly is happening underlying this current economy. And I think that also expands into not just the United States, but north to Canada and probably more broadly into Europe, that the market that usually is 2/3 driven by the consumer and spending with regards to the United States and less so Canada, is currently no longer being supported by the consumer. It is being driven entirely by the AI CapEx cycle. And we're starting to see a fracturing in terms of what's working and what isn't working. And certainly during bull markets, which we most certainly are in, you see rotation as you go from hot sector to hot sector. But I believe that the next big concern over the next probably 3 to 5 months, 6 months, is likely going to be housing and the consumer. Right now, you've seen US large cap utilities that have absolutely been on a tear, and they're up 20+%, which has outstripped the S&P 500. It's kept pace with the NASDAQ. These companies have largely benefited from this CapEx cycle. But when you start to look at consumer discretionary, you start to look at staples, you start to look at companies that are generally driven by the consumer, and they're not doing quite as well. And when you really dig down and you look at housing and home builders, it's even more dire. You have a situation where in the United States specifically, they are bidding down mortgage rates for people to buy brand new homes. That is how bad the demand side of the housing market is. This tends to be, and I think that when you and we were just talking about a famed, depends which circles you are in, Canadian economists, but most economists will say that there's leading indicators, but in reality there aren't any, not actually, none that are perfect, and certainly none that will give you an indication in which we might be rolling into a recession. But I do believe that the consumer, but more specifically housing, is a really great signal for weakness. And I believe once you see a return to work on the government front in the United States and you start to get some data, you'll start to see that the housing side of the equation is going to become more prominent and prevalent in conversation and headlines. And I believe that it's kind of a canary in the coal mine, so to speak. And if it isn't resolved, we're in for some trouble. And post FOMC, so like last week we had Chair Powell speak and he cut interest rates. He was quite hawkish in his cut, stating that he believed that the economy was still quite hot, but he called into concern the employment situation in the U.S. The same thing was echoed north of the border by Tip Macklem. And the reality is that we have a housing market that drives, especially in Canada, a big portion of the economy. It's a massive employer, but also a driver of a lot of, we'll call it capital elasticity, which means people spending money, that is in dire straits on both sides of the border. And so from an economic perspective, we're in a position where it was believed that we're going to get a Fed rate cut in the US in December. It was pricing in around 90% chance. That has been cut down to about 67%. And this concerns me because I think that it's probably imperative that they do cut due to the fact that housing's so unaffordable and that so many folks are falling behind. And the risk really is that if these home builders decide they're going to start shutting down programs in terms of house building because they don't have enough demand because housing is unaffordable, well, shoot, that's a lot of folks that are going to be relieved from their jobs, which just compounds the effects. So I think that moving forward, while certainly the AI boom is going to continue, the return on invested capital, if you were listening to any of the major hyperscaler cloud companies, so Google with Google Cloud, Amazon with AWS, and Microsoft with Azure, each one of them talked about how their return on their invested capital over the last, call it 24 months, maybe even longer, maybe closer to 30 months, has immediately been sopped up, which means they've been adding between 2 and 4 gigawatts of data center capacity to their infrastructure, and there are customers filling it immediately. So the return on the invested money into AI, or more broadly, just semiconductor and rack build out, you have a return on that money. That speaks to a justification, which means that this is not a bubble yet. Will it be? Probably, but we currently aren't in it. However, we are seeing a few cracks show up in other parts of the market that really matter. So I guess this is me wrapping up my market update and saying that we have a pretty bullish seasonality coming into the end of the year, but we're seeing some underlying problems with the consumer and with the inside of the housing market. And as Canadians, we know the housing market is incredibly important to our economy on both ports and in Toronto, less so in Alberta, but it's a very important part of our economy. And if it slows and continues to slow and break down, we're in some deep caca, and no amount of AI capex is going to hide it. So Mel, not sure if you have any questions, but I do believe that some form of budget coverage here is likely going to address this problem. That's my prediction anyways. Now for you, how do you see this afternoon shaping up?
Yeah. Okay. So I'm going to address that, but I want to just touch on a couple of the points that you made and sort of like link them into the political and economic side, as you have sort of with the economic side and the market side. I think that, one of the themes that I keep on coming back to in these biweekly conversations that we're having is the disconnect between how the markets are doing and the sort of upside available for people in markets versus how the economy is doing. So maybe more so the people who aren't invested and owners of capital in that way in the market. And I continue to be fascinated by this seeming sort of disconnect that we may be seeing between those two aspects. Because on the one hand, if you are in the market, I know we're seeing and sort of projecting perhaps a little bit of uncertainty, but that's not actually a bad thing for people who are in the markets. And it's actually a great opportunity for people who want to become more entrenched in markets, right? Like that's not an inherently bad thing. I think the thing that keeps on coming to mind for me is, okay, but what about, that's actually the source that we're seeing so much economic growth happen in Canada for people. And it's concerning to me at how disconnected that is going to be and could probably continue to be from economic performance in Canada. So I think that's just a really, when we look at the budget this afternoon and throughout the week, I'm going to be looking at the budget through two different lenses, how it's going to sort of stimulate economic growth that's good for everybody. And that puts sort of the average person in the opportunity to be able to have or feel like they have the ability to participate in capital markets in that way versus the things that are going to be invested in that will send positive signals to also improve markets. Does that make sense, Joel, or am I totally off base?
No, I think but that's part of the art of politics, right?
Yeah.
Where you have to satisfy the layman and the average person, because that is what drives like the middle class. That this is the Canadian American dream, the middle class. That is what I think has largely struggled over the last 15 years as we have struggled to see any sort of we'll call it efficiency gains. That has been largely behind the shrinking of the middle class. So our political, we'll call it representatives, have to take care of them because that's who votes you in. But in the same side of the ledger, or on the other side of the ledger, you have corporations which employ the lion's share of folks, with the exception of Canada, where we have a very large government workforce. But in any case, it is important to satisfy both sides, because without economic expansion, without corporate profitability, and then their belief that there is opportunity and their willingness to invest, you need to satisfy both sides. And I think you make a really great point in stating that they have to strike a balance here. And I think over the last 15 years, maybe correct me if I'm wrong here, I believe that our we'll call it political policy has been largely crafted to benefit the middle while ignoring corporate incentives. And I think that has resulted in inefficiency that has stagnated and or declined, and a investment, we'll call it environment, where that corporations are avoiding Canada, or they are just maintaining. And that has resulted in a number of companies moving south or elsewhere, or just returning capital to investors and not investing in the country and its people. So,
you make such a good point, Joel. And I think that what makes this budget so fascinating, I have a couple of other points that I want to respond to you on your market update as well that I think are important. But what makes this budget so interesting is that, and I don't want to be alarmist, but Canada, I don't feel, is actually in a place where we can, every politician, and we'll get into some of the politics of this budget as well later on in the show, but every budget is a political document, and the people who are introducing those budgets have political considerations at play. I actually think, I'm going to go out on a limb here, I actually think that Canada is in such a place right now where we actually cannot afford our leaders to be thinking maybe any more than like 10 to 15% politically as part of the budget if they actually want to address the systemic issues that we have in our country. Of course, that you have to be realistic and pragmatic, and you can't just do everything that you would want to do. Like Mark Carney is not the CEO of a corporation in the same way that we would say, okay, we need to fix X, Y, and Z, and let's immediately implement policies and not worry about the implications. There are very real concerns that his government's not actually going to be able to pass this budget because of the way that the parliament is shaking out in terms of seat count. So I would say that in this budget, And actually, in the past 10 years, you made a comment about how those budgets under the Liberals since 2015 have been largely focused on supporting the middle class. I would argue that those budgets have been largely predicated on convincing the middle class that the budgets are supporting them, because I don't actually see the middle class better off today than it was 10 years ago. And in that way, they may have checked, the Liberals before Carney may have checked a very important political box in consideration. And kudos to them. The Liberals are excellent at campaigning and really good at politics and comms, generally speaking. But I would argue that Carney is in a unique place where he has to sort of, and I kind of have a little bit of hope in him actually for this because of just his background and his pedigree. He has to sort of decide whether or not he's going to do the thing that people are going to want him to do or do the things that people need him to do, because we know that
Can he do the hard thing?
He can do the hard thing, but it is politically risky given the situation that he's in right now. And again, that is part of the calculus that any politician has to make. He can't, the Liberals, so the Liberals have come out, the Conservatives come out and said that they're willing to support the budget if it addresses affordability. Well, we know that affordability cannot be addressed short term without injecting massive amounts of inflationary spending into the economy like we saw during COVID. And we know that's not a good thing long term either. The NDP is in, I don't know where they are, but they have 7 seats and they're probably not going to even vote on this budget. They're going to abstain. The Bloc wants increased benefits for old age security and increased healthcare spending. And so you do have the pressure from all of the political parties in Parliament asking for things that, realistically speaking, cannot be delivered or demonstrated in a short-term capacity in this budget. So that's one thing that I would sort of just caution is maybe if we don't see in the budget the sort of direct middle class supports, perhaps we can be more open-minded about whether or not some of the things that the government is going to introduce will eventually actually have a broader and better effect on the economy that the middle class will experience. So that's sort of point one. You mentioned as well, okay, so talking about the leading indicators of economic performance, et cetera. I totally agree with you. I think that there's no one or any single economic indicator that's going to say we're headed towards recession, we're doing better. The way that I'm looking at this and the way that I would encourage folks to look at your market updates as well as budget and what's going on is the sort of collection of indicators and the patterns that we see. So yes, we talked a little bit about how the rate adjustments by Powell in the States are sort of thinking about unemployment and that aspect. Tiff Macklem actually doesn't have that mandate at the Bank of Canada. His mandate is much narrower than that in the United States. It's only about inflation, right? So it's not as though the Bank of Canada doesn't look at those things. They're talented economists. I'm not saying they don't look at those things. It's just their mandate is not for that aspect of it. So it's very interesting to consider the relationship of all of these things. I would argue that in a productive economy that's doing well, it's an important consideration. If you have people who want to be working that aren't working or are not working to their full productive capacity, that's where you start to run into some problems of getting this idea that we have the strongest GDP in the G7 that's supported by non-tangible growth in housing assets, for example, that benefit people who own houses, particularly people who've owned houses for 20 or 30 years. So again, I do think that that's an important consideration to look at, but it's not been in Canada seemingly as big of a focus when it comes to that. Again, if we look at the employment data from Canada, particularly when it comes to youth unemployment, which we've talked about a lot on this pod, I mean, we saw a 25 basis point rate cut last week in Canada as well. It's not as though I don't know if they'd be cutting further if they were I guess that's a question for you too.
That wasn't the signal. So based on what Tiff was saying, it was not a dovish cut. It sounded like they won't be cutting the remainder of the year.
But I'm just saying, if they did have unemployment in their mandate explicitly, as Powell does, would that have changed? I mean, I guess we could go down that whole rabbit hole, but I don't know. But those are some of the patterns that I look at when it comes to looking at how this is going to shake out holistically. So
Yeah, I think moving forward more in Canada, and thinking about the Bank of Canada's role, I don't anticipate that it's going to add another mandate to their. I don't think
No,
that's coming. I
no.
believe that it being and unemployment being more directly tied to the federal and provincial governments is actually a bad thing. I would love to see it shift away from folks that are voted in, so that their incentive is not to employ more people as they roll out their budgets. And by employ, I don't want more government employment. I would love to see some verbiage from the federal government around expanding Canadian capital markets,
Mhm.
making it so that we have a deeper secondary bench than just our pensions and our government budget. I would love to see that. That is truthfully where Canada is lacking, and that's venture capital, private equity capital, and because quite frankly, most of the money in this country is held in Canadian family hands, and we need to figure out a way in which we can become more like the United States, that has a private credit, private equity such pool of capital that is so deep that they're calling it, and it's becoming somewhat of a concern that there may be a bubble in an overflow of capital and for the wealthy. And that is a luxury of riches that they have that we do not. And we would do well to foster in our country, given that it would enable us to diversify, would enable us to take advantage of opportunity, and it wouldn't make us so darn dependent on our governments to get things done, get things financed, et cetera. So given that doesn't happen overnight, it's very likely that we're going to see and continue to see these budgets become more and more interesting or important for the average person to pay attention to, kind of as we alluded to earlier. And I anticipate that our conversation on Friday is going to be an important one, because at the end of the day, the Canadian market is fractured in terms of what's performing and what isn't. Mining and banking is dragging us along. With the exception of Shopify, we have barely any tech, we'll call it, as a percentage of the index and TSX, tech is not big enough. It needs to be bigger, whether it be communication tech services or information technology. We need more of that. And without secondary capital markets, we are not going to foster it. Through the first 3 or 4 years I did a podcast, that's all we talked about. It was like, how the heck do we get more folks interested in investing in our people? Sadly, we talk a lot about just American tech companies coming to Canada as being a win. We need to foster them ourselves. We have one, and Shopify is fantastic, and they're just an incredible, we'll call it, like, I think there would be a lot of mentorship that came out of any Shopify employee or early employee leaving and then starting a company. I think it'd be great if we could keep them here.
Well, you're making a really good point, Joel. Actually, can we stay on this point on employment and public versus private employment and that aspect? I think that's actually an interesting dovetail, unless you want to move on to something else.
No, I would like to chat about it a little bit. I have this people that are coming to fix something at my house and they're calling me.
Oh, gosh.
Anyways, I don't need
Well,
to
there you go.
deal with it.
Yeah. Okay. Well, I think that one of the things that is important to look at in terms of the employment picture, and you touched on it in terms of investment and in companies like Shopify and all of these opportunities to sort of have this strong private sector employment, and then have the people who are at those companies that were there at the beginning sort of be able to spin off. And that's really how you create that kind of wealth that you're talking about, that private capital market wealth. In anticipating budget this afternoon, I was doing some research on just public sector employment in Canada. And so this is looking just for the government of Canada. But again, a thing that Carney will have to look at. In 2015, the federal public service was about 257,000 people. In 2025, the federal public service is about 357,000 people. That is an increase of about 40% since 2015 by about 100,000 people. If we look at, I didn't look up this data from primary source before the podcast, so I'll stand to be fact checked because I just did a quick chat GPT calculation. But in Canada, 21% of Canadian workers are employed by the public sector. That is in contrast to about 13 to 15% of workers employed by the public sector in the United States. If we look at a sort of public sector worker per capita basis, Canada has about for every one public sector worker, about one Canadian, 9 public sector workers. And then in the United States, it's about 1 to 15, so a bit higher there. But I think just even looking in terms of, again, we're not going to get into like a bunch of contentious issues on this podcast, but I think just we've seen a lot of labor unrest happening in Canada. We've seen a lot of prevalence of sort of union voices and creating sort of fiscal challenges, but also operational challenges for governments to consider as well. And so I think an important piece of this employment puzzle is not just more jobs, it's more private sector jobs, and addressing that number of jobs is not an objective metric to be looking at these things about. We need to be looking at where those jobs are placed and what those jobs are doing. We don't need more jobs of people doing things that are not creating productive value. And so I think that's just like another important consideration to look at, because I do think that employment in Canada becomes complicated when so much of it is driven by the public sector. And that becomes difficult when the public sector itself is in a bit of a bind in terms of how it's going to deploy its scarce resources to stimulate growth.
Completely agree. And this just came to mind, and this is a conversation I was having with my wife and a few other folks around infrastructure build out. And I think that in this budget coming this afternoon, there's going to be some focus there. I believe that there's two specific items that I think need to be addressed and talked about a little bit more in Canada that I don't see happening very frequently. And I believe that there's probably a disconnect between an understanding of how this works and on both our political representative side and even just people that are everyday voting in our country, in our provinces and cities, et cetera. One, we've seen an enormous amount of immigration. And as a result of that, our infrastructure is starting to, we'll call it fail a little bit, or even just become overburdened by the amount of population growth.
Fail. I think that's fair.
Yeah. Okay.
Provincially and federally.
Yeah, totally. And the way in which we approach the investment in infrastructure and how we justify the return on our capital is, I think, being misrepresented and probably mishandled. So in Alberta specifically, and I'm very close to this given that most of my family works in healthcare, I find that they are and crying, and I think this probably goes across the entire country, but very, I think acutely in Alberta, they're crying for healthcare infrastructure build out, hospital build out, more beds. The way in which I think our province thinks about the $5 to $7 billion cost of a new hospital, they think we can't afford it or whatever because we're going to run a deficit. And the reality is that the upfront cost of $5 to $7 billion is an incredibly tough pill to swallow. However, these hospitals are, and if you look at the age of each one of the Edmonton hospitals and the Calgary hospitals, are 20, 40, 60, 80 years old. And the return on invested capital over that period of time is enormous. So to continue to delay or to avoid based on the cost of the upfront capital is a massive, massive miss. And the failure actually comes to destroy the political party in power at the moment. And it becomes divisive, and it becomes a point in which it separates both sides of the ledger to the point in which they can't agree on anything anymore. And I would implore our politicians to look at the amount of investment into certain areas as being something that has a 50-year pay period, and how they speak to their constituents and the folks that are voting for them or their parties in general. It would go a long ways for them to be like, okay, $5 billion for a hospital, maybe we need 2, we'll call it 10. Well, if we want our population to go from 4 million to 5 to 6 to 7 to 8 over the next 25 years, you need this infrastructure because they will all fail. And if you do not make that investment now, it's going to be 3 or 4 or 5 times more expensive later on. And you're going to end up losing your political mandate. And I guarantee you that running a deficit in a sense of building out infrastructure versus just employing people and providing services that are too expensive or whatever is going to be a significantly easier pill to sell or policy to sell than it will be to try to deal with it later on. And I think if this was taken care of 7 years ago in our province when it was supposed to be, or 8, or it might have even been 10 at this point, I guarantee you that the current political discourse would be a whole lot different right now. And I would then add what we need to start looking at with regards to GDP, with regards to efficiency, is the amount of electrical capacity. What you'll notice from the big 7 companies and the way in which they report earnings, they're starting to talk about gigawatts.
Mm-hmm.
They're starting to talk about power demand. And what this has, and I just read Where Are Our Flying Cars? Fantastic book, highly recommend. And it speaks to the best indicator of government or GDP growth and efficiency expansion is actually measured by the amount of electricity that we and energy that we consume. And if we started measuring ourselves, our production on the amount of energy that we're consuming, it shows us that we are growing and that we're delivering a better standard of living. And certainly electricity can be carbon neutral, it can be all of these things if we do it right. But we need to shift the way in which we think, the way in which we sell growth, that we sell infrastructure investment, and that we sell our country in general. And if we don't start to change and educate folks, we're going to continue to spin our wheels politically, because right now it feels like absolutely nothing is getting done and no one agrees to anything. And I believe that we currently have an incredible opportunity, especially at the federal level, to really get a whole lot of stuff done that we missed in 2015, 2016, 2017, 2018.
Completely agree with you. I would say like both federally and provincially. I mean, again, I lean more conservative. I'm fully prepared to support Carney in this budget if I see some of those targeted investments. I think that we're not really at a point where things are political anymore. It's just like the facts of the matter are, we need to get a control of our immigration. We need to make investments in infrastructure. We need to stop propping up our economy through public sector spending and incentivize private sector spending. We need to ensure productivity is high. And of course, most political parties agree on these things. It's always just a matter of the path that they want to take to get there. And I agree with you when it comes to those capital investments. I think that there's no question that parties on the left and right for the past decade or so have really missed the mark in making those investments. And I think that anybody who's looking at the numbers will see that governments have sacrificed long-term capital spending in favor of short-term operational spend that gives a clear win. Like, for example, schools and hospitals, et cetera, they take years to build, oftentimes over a couple of political mandates. So I think that the thing that we're asking for from government has to also be to reward governments that are going to invest in infrastructure and make those investments. But it's also, again, this is where it becomes a very vicious circle, because it's very difficult for me, if I'm a nurse or a teacher or a postal worker or whatever we're saying, to sacrifice my own inability to pay my bills and feel like I'm living a good life in favor of things that are going to be better for the country long term, because we've had massive inflation. So, and immigration and all of these different things that are definitely undoubtedly getting in the way of growth because we haven't managed it properly. So I think it is also not fair to ask voters to give up their well-being for the country in many ways. And in many ways, I often think like it's kind of a luxury position to be able to like do that. And and for those who can, that probably does make a lot of sense. But I do think we need to have empathy for people who, are not even thinking about like what they're going to do if there's a little bit of a downturn here in November in the market that gives them an opportunity. They're literally just like, milk has increased or cereal has increased and I can't feed my kids. And I think that's the kind of stuff that I'm hoping that the government considers, is it's like, we don't want to leave those people without support, but I think the way in which we deliver that support is going to be extremely important, because there's a way to deliver support and address these problems in a way that's inflationary and makes the problem worse. And there's a way to deliver these supports that makes the problem better. So again, I think I'm just saying what you were saying, but I do feel for the political calculations that governments have to make on these things.
Yeah, it's hard. And if you continue to kick the can down the road and don't do the hard thing, it just gets worse. And maybe that the US has been doing this with the debt bubble. So has Canada to a larger extent. You know what? If you don't do the hard thing now, you rip the Band-Aid off, so to speak. It's just going to be worse in 5 years. So
if you don't do the hard thing now, you'll be sitting in your apartment in Calgary watching Selling Sunset and finding yourself thinking that it is actually more affordable to buy a mansion in Los Angeles than it is to buy a home in Calgary. That's what'll happen.
Yes, exactly. And then you won't be able to afford the exit taxes, and then you'll be stuck. But
exactly.
In any case, Mel, we're going to have a conversation on Friday. I really appreciate you taking the time to kind of prepare folks for what's going to happen this afternoon, and I look forward to our conversation.
Yes. And if anybody wants to sort of be updated, Joel's going to obviously send out the email with this information, but you can also subscribe to our Pocket Lobbyist email too, which will have budget tidbits in it. And then for members on our platform, we're doing like a full comprehensive rollout on Wednesday. And then we'll do some of the recap as well in the podcast that we do on Friday. So lots to resource and access over the next few days.
I'm excited to take it in. I know, and I'll say this as a we'll call it a promote, your work is significantly better than the stuff I get from all the accounting firms across the country. If anyone's paying for that garbage, I highly recommend you just ignore that and move on to Pocket Lobbyist work. So,
thanks,
Mel,
Joel. We'll take your money.
Thanks again.
Take care. Thanks,
Exactly.
Joel. Bye.
That's all for today. Thanks for listening. If you found this valuable, please subscribe and share it with a friend. As always, the information on this podcast is for educational purposes only and should not be considered financial and/or tax advice. Please consult a licensed professional for your own personal situation. Joel is a registered portfolio manager and investment advisor, and clients of his and his firm may own securities discussed on this podcast.